This is where everything breaks. This is how everything breaks. This is just beginning. We'll see how it all plays out. One thing I wanted to mention, I was looking at, Vince Lancy has a very good take on the markets.
The US just got hit with a debt downgrade, and gold is already reacting. But this isn't just a bounce. It could be the start of something bigger. Andy Schectman breaks down why gold is rising, what's next for silver, and what this moment means for your wealth. You don't want to miss this.
This is just beginning. We'll see how it all plays out. We've all lived under this belief that these types of issues will always be resolved and papered over, and they always have been, I guess, maybe until they're not. But right now, these are certainly interesting times. Yeah, and it's funny, they talk about, and I don't know why they decided to do it now, right when you have an administration actually addressing the irresponsibility and the corruption in basically the evisceration of our currency through ridiculously irresponsible programs that the government has spent our money on. Now they want to do it, not before this. I think Moody's is kind of nonsense, to be honest with you. But they talk about a warning of a debt to GDP hitting 134 by 2035. But the truth of it is, if we add in the unfunded liabilities, we're well north of 200. And, they say an interest burden will consume 30% of the revenue by 2035, up from 9% in 2021. Well, the Congressional Budget Office also said by 2031, every penny of tax revenue will go just to pay the interest on the debt, and these mandatory off-balance sheet entitlements, Social Security and Medicare as an example. So anything that's discretionary, like military, which is $1 trillion bill this year, will be borrowed. And at what point do we realize that the world has lost appetite for the Treasury? So who's going to buy it? It's that who to problem again. Who are you going to sell it to? And when you see the Fed come in and not even admit the fact that it is quantitative easing, that they are buying treasuries, and they do that, they're trying to plug a hole in the dike to keep the bond market together and to keep this from accelerating. But, this is a real problem. At some point, the irresponsibility catches up with you. At some point, the way that we behave on the international stage, the tariffs, the threats, the sanctions, the spending, the borrowing, the raising of the debt ceiling, on and on and on. At some point, I think the attractiveness of our debt looks silly. And anyone who would hold duration of any length greater than 6 months or less, I think is a fool in this market right now. And the bond market is proving that to be true. And again, it's really interesting that as rates are going up, so too is gold. Gibson's paradox speaks to the inverse relationship between real rates and the price of gold. And as rates continue to rise, even if we have to suspend the fact that we know that the CPI is a bunch of crap, but let's just take it at face value. That's what the market uses. Well, as the rates right now are certainly over the CPI, that is a return, a real return. One would expect that gold, which does not pay a real return, should be retreating. And one of the hallmarks of this market that is vastly different, Dunnigan, than anything I've seen in 35 years is, it's kind of like a fight in high school where, you hit the kid, he never gets back up. You're watching two kids fight. One hits him, he never gets back up. But this time the kid keeps getting back up. He gets hit and he gets back up. He gets hit and he gets back up. And I've never seen that before. Maybe that's a bad analogy. But the point of it is that they never did this. It would get hit and it would be down for years and sometimes even longer than that. And you look at 2011 when it hit $1,900 and it was down for a long, long time, 8 years or so, 7, 8 years before it finally came back. And but this time seems to be different. It goes down $100 or $200 and comes right back up. And the demand in Asia is overwhelming. And you can see it. It's almost as if the Chinese now are controlling the price of gold. I don't think they are with silver yet. But there was a very interesting tweet by Eric Young. I don't know if you've had him on your show. You should if you haven't. He's the King Kong on Twitter. He's phenomenal. He lives in Hong Kong, I believe. I've had him on mine. He has a very, very interesting take on things. And today he basically said China's involved in all of this too. suppressing the silver price because they're trying to accumulate every ounce on the planet. Think of them going around buying the doré and the concentrate, as we've talked about. And what he's basically saying is that they're thinking for years to secure supply for their country for future generations. He said, just hold on, you'll see silver be triple digit, don't let go. So interesting times for sure. Yeah, I think that the price or the ratio is irrelevant. One thing I wanted to mention, I was looking at, Vince Lancy has a very good take on the markets, and I was looking at a string of texts between him and Luke Gromen and talking about Vince is basically saying that we were that close to a major international regulatory crisis and it was averted. And he says, now it makes sense. I want to read something to you and give all the credit to Vince and to Luke, but I think people should hear this because it's really kind of crazy if it's true. He says, the COMEX delivery that was shut down, the extended shell games of metal going on for months, the seeming liquidation only behavior, meaning they basically got together and said, no buying, fellas, no buying, only selling. And I don't know if that's true or not, but he says the seeming liquidation only behavior, bullion banks covered shorts and funds sold. Normally, funds would not let the banks off the hook. This market became liquidation only. It was so bad. Have been involved on both sides of the table with those. It's a lockdown, circle the wagons type panic. We came close to a serious problem. It was near a meltdown in the gold market. Physical gold wasn't available to meet delivery promises, so major players scrambled behind the scenes. Bullion banks were in trouble. Big funds bailed by selling, letting the banks off the hook. The market got so shaky, they made it liquidation only. You could sell but not buy. It was full panic mode, but they managed to patch it up before it blew up publicly. It shows the system isn't as solid as it looks. If people can't count on getting real gold when they want it, trust in the market could break down. Going forward, more investors might avoid paper market and demand the real thing, blah, blah, blah. Now, Luke Gromen says, now imagine what happens if it was the U.S. government bringing the gold back, and the response to all of the above, talking about the banks, from the U.S. government is F you. Send us more gold this month and next month too, and more behind for July, August, and September. Vince then says, it was, Luke, it was. No ifs, ands, or buts. You know it. Bullion banks to cover the Treasury, calling it back, or the Department of Treasury itself, it most certainly was. So here you have two of the smartest guys on the planet, more or less saying that we're this close to watching the whole COMEX blow up because of all of the delivery requests. Well, who's standing for delivery? Over 16,000 contracts so far in May. He's saying it's the government. And the government says, I don't care how stupid you are that you're short. Give me the gold. And he says it was just narrowly averted. At the same time, we see China, their gold imports into the country were 127.5 metric tons for the month, an 11-month high. The world is continuing to ask for delivery. This is where everything breaks. This is how everything breaks. And if you go back to 2020 and I started talking to you about the deliveries off of COMEX, it started then and it's accelerating now. And since 2020, it's been a common theme. Prior to 2020, it was a never theme. No one stood for delivery. And when you see the LBMA go from T+1 to T+8 weeks, when you see a guy like Luke and Vince say this was a disaster averted on COMEX and it's the U.S. government standing for delivery, things are starting to come into focus. And the rest of the world understands this. And that's why you see them at the same time standing for delivery. Things are getting really, 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 really interesting as far as I'm concerned in the gold market. The resilience, and I think silver's not far behind. You look at the technicals, they're identical with the exception of gold has broken up through the handle. Silver is right there at the technical resistance level. But look, what is different to me is that you have willing buyers throughout the world standing right underneath the 200-day moving average. And if they are foolish enough to use their bullets to suppress it, you have people standing there, countries, sovereign wealth funds, central banks, saying, okay, we'll buy it and we'll stand for delivery. And you're seeing this. This is a wake up call to the participants of the gold market and to those that are silly enough to be naked short.
As Andy explained, the debt downgrade isn't just a warning, it's a signal. Gold and silver are moving for a reason. Stay informed, stay protected. If this video helped you see what's coming, give it a like, subscribe for more real insight, and hit the bell so you never miss an update.